In today's video, I'm gonna show you guys a simple scalping strategy using Orderflow. Now, if you guys have come to my live streams, you probably see a chart layout like this, but recently I've been introducing the footprint chart. Now, I started trading footprint charts all the way back in 2013, and now I'm starting to showcase them a little bit more during the live streams. Now, if you already have a lifetime license in NinjaTrader, you have what's called the volumetric bars, and they're gonna give you the same information. We can see the volume within the bid and ask of each candle. But more importantly, we need to know what is the delta. And you can look right down here and see the delta, but there's a more simpler solution for the footprint chart. The footprint charts that I'm actually using is an impact order flow indicator from Affordable Indicators. If you guys want to check them out, it's a link in the description box down below. Use promo code Mike. We'll always make sure you get the best deal. But if we look at this footprint chart from Affordable Indicators, we can see the numbers much more clear than the version that we actually get from NinjaTrader. Now the version that comes with NinjaTrader is called volumetric bars. We can see the same bid ask data. Down below us, we get the delta. However, if we look right over here on the Affordable Indicators order flow charts, we have the delta on the bottom of the candles. Now, this is going to be crucial for the scalping day trading strategy that I'm going to share with you guys in this video. And it's going to be a very simple concept. On the main channel, I talked about this and shared this strategy a while back, but now I think it's a little bit easier to understand as we can see the data a little bit easier out here. Now, before we go ahead and discuss the strategy, I want to share with you guys what exactly we're looking for. Notice I was able to make the numbers a little bit larger, something that I am not able to do with the volumetric bars. If I want to make the numbers bigger, I simply got to go ahead and zoom this up. It just gets kind of ugly and unusable in my personal opinion. The Affordable Indicators, I can simply go right into the settings and actually change the numbers. Notice I made the delta numbers much more larger because that's going to be a very important piece of the information that we need to pay attention to. So on the bottom, we're going to see what is called the delta. Now, this is going to be important. The delta is going to be the difference between the aggressive buyers and the aggressive sellers. A positive number means more aggressive buyers in that candle. A negative number means more aggressive sellers. Now, the second thing we want to pay attention to, notice that each candle has a gray highlighted area within the candle. That represents the point of control, which is nothing more than that is the price level within this whole entire candle that has the most amount of volume traded at it. So 59 and 34 is the highest amount of volume of any two cells combined. Now, the next concept that we want to pay attention to in this strategy is going to be what's called stacked imbalances. Now, if we look right here, we can see that we have three dots. We can see we have three dots right here. Bing, bing, bing. We have a space, and then we have two more dots. Now, a stacked imbalance, what it's doing is it's looking at the price. It's looking at the left side and comparing it diagonally over to the right and the value. Now, I got my value set at 3 times. So anytime the diagonal variation is 3 times the difference, then it's going to plot an imbalance. Now, one of the reasons this is important is the imbalance zone, one, can act as support or resistance, but also it can give us a breakout point. So if we know sellers got aggressive on this down candle right here, guess what? All those people that were short into the hole, guess what? As we start breaching above it, how do you close out a short position? You then have to become a buyer. So let's walk through the first trade setup of tonight. And I'm not going to go ahead and cherry pick it. You can see as I'm recording the video, it's 8:13. And we're just going to walk through some examples. Now, this will work for the NASDAQ as well as the S&P 500. In this example, I just have each one of these footprint candles set to a 5-minute bar. On the NASDAQ, I use a 1 minute. Now, if we look at the first delta right here, what do we have? We have a minus 65. The next delta is negative 787. So is the delta increasing or decreasing? Well, it's increasing to the negative side. The next candle, we get a big whopping down candle, and the delta now is a negative 198. Well, is 198 a more bearish number than the prior candle? The answer is no. 198 is more positive than negative 787. Well, do we get in right there? No, because we don't have 2 candles. The next candle, we get a negative 161. And notice now we've had 2 consecutive candles where the delta has been increasing. Then we also want to pay attention to what is the direction of the market. The market was heading to the downside. So in this strategy, we're going to look for quick little counter trend moves and try to take advantage of quick price action when we get a particular setup. Now, once we got this candle right here, we have now 2 consecutive candles where the delta is getting more positive, and in this case, as the market's coming down. Well, now let's talk about how we can enter. One, we can simply enter at the close of that candle, or if you want to wait for confirmation, there's 3 other points of confirmation we could use to enter the trade. The simplest one would be if we go ahead and we break the high of that candle, we can then look to initiate a long position. Well, if we look at the next candle, did we ever break the high of the prior candle? The answer is no. What about the delta? The delta was once again increasing. We had a positive delta of 191. Now it's a little bit hard for you guys to see. We also have what's called a washout signal in conjunction with the delta flip strategy going on at the same time. There's a green arrow right here, which is highlighted, and that's part of the affordable indicator package that highlights that for us. All right, so that's the first way we could get in. Well, the second way would be, all right, wait and see, can we get back above the point of control? If we start breaking the point of control, we can then look to enter long and try to capture the move up. Now, what's beautiful about this, if you're trying to play a break of the point of control, we know what our risk is. Our risk would be at the low of that candle, and that'd be roughly 2 points of risk that we would be risking on that trade. Or we can use the third method to enter the trade. So if we have a bunch of stacked imbalances at the low of the candle, we can actually look to enter the trade once the market starts getting back above that price point. Now, one thing I do want to make a caveat on real quick, since this candle right here, the negative 161 delta, closed very close to the low of the session, if the next candle, which happens to be the candle with a positive 191 delta, if that candle made a new low before coming up, either taking out the high, going above the point of control, or getting above those stacked imbalances, instead of putting my stop loss below the low of the negative 161 candle, I simply have my low below the low of that positive 191 delta candle. So in this situation, all right, we could enter the market. Now, me personally, the way I like to trade, I would probably enter this particular setup right as we came above the stacked imbalances. Now, we do not always have stacked imbalances as this trade is setting up. This just happens to be one of those situations, the first situation of the night where we actually see that take place. If I was going to enter right there, my stop loss would be at least 1 tick below the low. Still looking at a 2-point move. Now, a couple ways we can look to target this. One, we can simply look for a 1-to-1 target. So 2 points, let's see where 2 points is. 2 points right here. We can then take a target 1 off, or we can simply move our stop loss to break even at that point and continue to try to trail the market until the market finally comes back and hit our stop loss. Now, there's a couple ways we could trail this. One, as long as the delta continues to increase on the way up, then we can just simply hold pack. But once we start seeing a declining delta, like for this case, we have a -6 or we have a +6 delta here. That's less than that negative 191. So we can put our stop loss right up here if we're trying to trail it up. Then the delta increase. I don't want to move the stop loss. Delta increase. Don't want to move my stop loss. Then we get a -13. Okay, now I want to move my stop loss below that candle. Then we get a +80, +117, +36. Well, 36 is a more negative number than 117. So then I would actually move my stop loss right below that candle there. Then we get a positive, then we get a -34, and then our stop loss will be there. And we'd actually get dinged out right there. Actually ends up being a fantastic example. If we go ahead and we map that out, you would have roughly a 6.25 point move, and you're only risking 2 points on that trade. That's basically a 3-to-1 reward to risk ratio. Now, that reward to risk ratio is dynamic because we don't know how far this move is actually going to go before we're actually going to be stopped out of the trade if you use that type of management of the trade. All right, so let's keep looking at this on the way up. Was there any sell signals as the market was going up where we could go ahead and take a couple points off this? We need to see 2 candles of declining delta. We have -34 is less than 96. 19 though is greater than -34. Then we get a 192. Then we get a +26. Then we get a 10. Then a +147. Then a -23, +52, 23, 95. Okay, the next situation we'd have would be right here. Now let's look at this real quick. There's a couple ways that we could look to play this. One, you can try to get in near the point of control. If you got in right at the point of control, you would not have been filled on that particular trade. Or 2, if you waited till we got above only 2 stacked imbalances, I really want to see 3 stacked imbalances consecutively. But once we got above this, we could then look to go ahead and sell the market as we start to come back down. Now, in that situation, you probably get in right at the bottom of that candle. Stop loss would be up there about 2 points. Well, does the market move 2 points in the favor? And we can see the market goes down exactly 2 points. And in this situation, if you did not take a target 1, then the market would come back up and you would end up getting stopped out for break even on the trade. Now, something I really want to see, this would not have been my ideal setup because you started getting the negative delta as we were already coming down. I prefer to see as the market's going up, we see that negative delta sequence, kind of like what we saw down here. The market was going down and we seen the delta starting to build more positive. So let's see if we can find another situation like that. And again, right here, we're just chopping around. We don't really have a directional movement in the market. All right, now we start moving down around this price point here. All right, we have 13, negative 51, negative 146. Then we get a positive 15. Then we get a positive 35. All right, so in this case, we can either enter the break of that candle right there, which we never broke above it, or two, you can look for the market to come down, get filled near the point of control, stop loss right below that. In this case, well, it would have been a losing 3-tick trade if you got filled at the point of control. If you waited for the market to break that candle, it simply would have been a no trade. But nonetheless, you know, if you took the trade, it'd be a very small stop loss. Then if you look right here, we're just chopping around, negative 134 plus 125. But then look, 67 is not greater than 125. So once again, we do not get a setup. Keep in mind, I said the direction of the market is important. If I'm looking for a buy, I want to see the market coming down, and then we're getting that negative delta flip very close towards the low. It could be, the low candle, the next candle, and then we start, buying on the way up. That's really all the setups so far in the Asia session that we've actually got out here tonight. You can see right here, we're all the way at the end. Now we're just kind of chopping around, going back and forth, back and forth. Now, hopefully you guys will get a chance to see me place some of these trades in the YouTube shorts on this channel. If you guys aren't yet subscribed, make sure you hit the subscribe button down below and give the video a big thumbs up.